Here's the deal. I can either retire mortgage debt at a high 3% interest rate, or I can place money in dividend stocks that are going to get me to a 4.2% dividend yield on cost within 5 years, and then keep going up even more from there. Which of these two do I want to choose? I want to choose the dividend stock route. Hey everyone, it's Ian. I'm back with another video about dividend growth investing. Just like all of you, I like to watch videos on YouTube. I like to read blogs about personal finance, and there is one theme that I see coming up, and that is the theme of paying off one's mortgage early, or at least making extra payments towards the principal of one's mortgage. Today's video is going to be a contrarian one. I want to challenge the norm. I want to challenge the financial experts out there, and I want to place a different opinion into the conversation. And my opinion is that it absolutely makes no sense to pay off a mortgage early or to make extra payments towards one's mortgage. And I'm mainly speaking about traditional 30-year fixed rate mortgages, and I'm also speaking about mortgages where someone has a reasonable interest rate in the low 4s or high 3s in terms of percentage. And I'm speaking from experience because my wife and I, we own a home and we have a mortgage, and our interest rate is actually below 4%. So we got a great interest rate. We bought in recent years. And if you've been following the interest rate markets, you know that interest rates right now are at historical lows. And even if one purchased their home before, a long time ago, it's very easy these days to refinance one's mortgage into a low interest rate in the high 3s, low 4s, in that range. And so with interest rates that low, in my opinion, it does not make sense to make these extra contributions to one's mortgage, especially if they are a dividend growth investor investing in high quality blue chip stocks that pay increasing streams of dividends over time. And the fundamental reason that I have this belief is I look at everything in life as an investment. So let's say I have $1,000. I have a finite amount of money. I have two investment options here. One investment is paying extra towards the mortgage. It's option A. Option B, buying a dividend growth stock. If I retire mortgage debt, the best return that I will ever get is my interest rate on my mortgage, which is basically a high 3% interest rate. And then I'll get that interest rate in perpetuity or over the remainder of our mortgage loan for as many years as it remains, because I'm retiring that debt. In my opinion, that is not a good return. That is not a good return at all. And so in the world of dividend growth investing, for the average blue chip stock right now, especially a high quality blue chip stock, I can get yields, starting yields in the 3% range. Now you may be thinking, hey Ian, 3%, that is lower than what you were just saying is the interest rate for a mortgage loan, which is in the high 3s or low 4s. Here's the thing, dividend growth stocks, the best ones, the ones that I like to invest in, raise their dividend year in and year out. And they have track records of doing this. And a lot of them raise their dividend quite aggressively, 7% per year. If I buy a stock right now with a starting yield in the 3% range, and it raises its dividend 7% per year for 5 years, I'm going to be at a 4.2% yield on my cost. So for every $1,000 I invested, I'm receiving $42 per year. And it only goes up from there. I have stocks that I bought not too long ago that I'm already yielding upwards of 10% yield on cost. So on my initial investment of $1,000, I'm receiving $100 or more per year in dividend checks and cash flow that I can use to do anything, to fund my lifestyle, which includes making mortgage payments if I have to go out to dinner, to reinvest in other stocks, to go to the movies, whatever I need it for. Typically, I take my dividend checks these days and I reinvest them because I'm trying to build a snowball effect in my dividend portfolio. And here's the deal. I can either retire mortgage debt at a high 3% interest rate, or I can place money in dividend stocks that are going to get me to a 4.2% dividend yield on cost within 5 years, and then keep going up even more from there, which of these two do I want to choose? I want to choose the dividend stock route. I just believe it's a superior investment opportunity. Also, there's an aspect of flexibility here. Things come up in life. Things happen. If one has dividend stocks, they are always spitting off cash flow. As I had mentioned, I'm using the cash flow right now to reinvest and build my snowball, my portfolio even greater. However, let's say I hit hard times. I can use that cash flow to fund my lifestyle, to pay bills, to pay expenses. If I retire mortgage debt, that money is doing some good because it retired debt. It's less money that I have to pay later. But unless I take out a home equity line of credit against the mortgage, I can't really tap into that. It's not easy to use that money to fund my lifestyle, to pay bills. And so I not only look at this in terms of returns, I believe there's an opportunity for superior returns from an investment standpoint by taking the same dollars and placing them in the dividend stocks. But I also look at it from a standpoint of flexibility. I believe that the dividend stocks, the dividend model, provides me more flexibility, more security, more stability in my lifestyle. And I really like that because it helps me sleep better at night. Eventually, my dividend portfolio is going to be large enough that I have an abundance of cash flow that covers everything. It covers all of my living expenses, including my monthly mortgage payments. And so what's interesting is a lot of this comes full circle. When my dividend portfolio gets big enough, then perhaps I use some of that income to make my monthly mortgage payments. What's even more interesting is once the mortgage is completely paid off, then that dividend portfolio of passive income means so much more because I have less expenses in my life. One of my major expenses is completely wiped out. So I kind of, coming full circle here, I believe there's a point at which I will want to pay off the mortgage, certainly. Obviously, let it run its natural course or maybe pay it off a little bit early, I don't know. But at this point, especially when evaluating the options out there, it's very clear to me from a return standpoint and from a flexibility standpoint that dividend growth stocks are the way to go. Of course, I want to add one last point here. I do believe investing in a home is actually a reasonable investment. There's a lot of people out there in the financial space saying that it's a bad investment. I think it's a person-by-person decision. I think every person, every couple, every married couple, family needs to make their own decisions around home ownership. But in my case, I believe that it's been a wonderful investment. We're really happy that we made the investment. And so that's just something else we're throwing into the mix in this discussion about mortgage loans. My name is Ian Lopuk. If you enjoyed this video today, a little bit of a controversial one, offering some contrarian viewpoints on the topic of paying off one's mortgage early. If you liked it, I please invite you to subscribe to the channel, to like the video, to comment. The comments on this channel fuel my content. I love the comments and they motivate me. It's the best way that you can say, hey Ian, thank you for what you do. I appreciate it. I really appreciate it. Before I leave today, just a fun and friendly disclaimer. My name is Ian Lopuk. I'm not a licensed financial advisor, and today's video is not financial advice. I am just here on YouTube sharing my passion for dividend growth investing. Today's video is for your fun and entertainment. If you are going to go out and invest capital in the stock market or anywhere else, please do consult a licensed financial advisor first. I thank you so much for watching the video today. I will see you in the next PPC Ian Dividend Investing video.